Hey everybody, welcome to Trading Capital's sector analysis of all the S&P 500 sectors. Today is currently February 11th. As we kick off week 5 sector review, there's lots to discuss. We'll be first touching on the XLK, which is in front of us right now. Basically, the XLK technology sector had a range of trading 3.96% from the low to the high, but it actually finished down negative on the session for this week, closing down the session minus 0.98%. Now, the importance of technology and what transpired this week is the fact that you made a new high during the week, but you could not hold that high and you reversed and closed negative. You've now actually put in a weekly reversal signal right off of this 100 weekly moving average, a long-term major moving average, which should be acting as resistance. Now, considering that you actually put in a weekly reversal signal here, as seen by this topping tail, you now favor some downside price action in the short term. The big level that I'm still watching is this downsloping trend line. Considering that we may have a sell signal, you could get a flush down to this trend line. Then that's kind of the line in the sand. Can the bulls hold this level, or do the bears push it back lower? Really, it's kind of at an inflection point where you want to stay on the sidelines for tech because it is showing some near-term weakness. Although it's still trading above this key trend line, we really have to be mindful about what the individual stocks like Microsoft, Apple, and some of the big names in these sectors are telling us. If we take a look at XLV, the healthcare sector, healthcare has yet again had another down week. Basically, the weekly range from the low to the high is 1.6%, but healthcare actually finished down 0.15% on the weekly session. Now, the importance of healthcare is you're still creating this trickle down pattern, although there are buyers still stepping in as seen by these wicks. But the fact of the matter remains is that you did make kind of a new weekly closing low. So that is still short-term bearish, even though you are seeing tons and tons of buying come in and weakness. We really have to pay attention to some of the mixed results in healthcare. You're starting to see some divergences between some of the larger healthcare names in this sector like UNH and J&J. So just be mindful in terms of what those larger names in this particular ETF are telling us. But long and short of it, XLV is still looking bearish on the weekly chart. And eventually it's going to, as long as we keep making lower lows on a weekly basis, eventually the buyers are going to subside and you should see a larger move down. You do have this weekly 100 coming up around the 128.65 as your near-term support. So perhaps you could get a bounce. I still see a longer-term trend line for the healthcare sector. Basically, this is a parallel channel we were chopping in for quite some time. You can see this was your big 2008 pivot breakdown, and then you recaptured the trend over here in 2013, had a breakout, a check back to support, and then look at this range that you've been chopping in, basically really touching the highs of that range multiple times. Then you broke out of it with the money printing that was turned on in 2021 and low rates. And naturally, the fact that you've hit this level, couldn't confirm below it, retrace back up, confirm back below it. This should act as some temporary support, but considering you closed back inside of this channel over here, I do find it very likely that you're going to likely test these lows at some point in time if we get a larger move down. Now, in terms of the next sector, XLY, the consumer discretionaries also closed negative down the session. Its weekly trading range was around 4.23%, but it closed down on the week minus 2.3%, so clearly showing a little bit of weakness. The big level for XLY, there's two trend lines we're watching to keep it simple. This upsloping yellow one connecting your major pivot over here, bounce, your chop over here, breakdown. Now you've retraced and you're still managing to be rejected. However, this is still technically inside bar bullish consolidation, so you could potentially try to form a base here to move up, but you also have this downsloping trend line bearing down on you as resistance. So clearly there's been 2 weeks of attempts trying to break through this level, and you failed on both attempts. So we really have to watch what type of consolidation we get here for the consumer discretionary stocks. Now, there's important stocks that can give us leading indicators for the sector, like Home Depot, Tesla, Amazon. So keep your eye on those particular stocks that will affect that ETF. XLC Communications is really intriguing because it did have a technical breakout and rallied significantly up into resistance. The stocks that were really impacting this particular ETF are likes of Meta, Google, Verizon. So look at those leading names to see how this sector moves. Now, look at this beautiful retrace, your COVID trend line, your breakdown zone, and you've done a full retrace and you've had a hard reversal off of that level. You're still technically inside of this original breakout candle over here. So as long as you don't lose this pivot next week, you could potentially consolidate to move higher, but you're at resistance in an extended move, and it's looking very unlikely that this is going to get above this particular resistance zone. Let's take a look at the XLP sector. So the XLP is showing a little bit of inside bar bearish consolidation. The weekly range on XLP was basically a 2.09% range, and it did also close down 0.59% on the week. A couple interesting stocks to pay attention to are likes of Pepsi, Procter & Gamble, and Coke. Obviously, if we pull up the Pepsi chart, Pepsi had a brilliant reversal to the upside on earnings, so we're going to have to pay attention to Coke to see what type of price action we get there. And then obviously the likes of Procter & Gamble, which is the heaviest one, is showing a tremendous amount of weakness in this particular sector. XLP is currently right now holding a market cap around 4.17 trillion, so it's around middle of the pack in terms of market cap weighting. If we pull up the XLF, sorry, that's the wrong one, XLF is still stuck at resistance, but showing to be one of the more resilient sectors, being the fact that likes of JP Morgan are continuing to hold it up, but we really want to pay attention to Berkshire Hathaway. BRKB is potentially putting in some negative price action and some divergences that could be vulnerable to more downside. Notice how you did close on a second week below this weekly 100 moving average. So you really only closed 2 weeks below on this attempt, and then you managed to recapture. So perhaps closing a second week down below likely sends you to the low end of this range, and then that's going to be the critical level for Berkshire Hathaway. Right now, if we flip back to the XLF, you've really had now 1, 2, 3, 4, 5 weeks of an attempt to get above this key yellow trend line, connecting a pivot to a pivot to a pivot to a pivot to a pivot, and you're putting in this potential doji candle. Now the volume is very light on XLF, so perhaps you can continue to try to attack this level, but it's really going to have to get a big move from JP Morgan, Berkshire to really break this key resistance level. Taking a look at industrials, XLI is also stuck at resistance, but it has been one of the leading sectors as well. In terms of XLI, it had a range of about 2.08% from the low to the high. It did finish down minus 0.69% on the week, so showing a little bit of relative weakness. A couple of the leading stocks that we're going to have to pay attention to are Raytheon, UPS, Honeywell. So there's a lot of mixed signals, but needless to say, you're still trading inside of this weekly reversal hammer candle that we got several weeks ago. You have yet to confirm above that level. So even though you're tagging and pushing up against this key resistance trend line, this weekly hammer is still intact as technical resistance, which leads me to think that perhaps we're going to see a reversal in the near term. You can clearly see on these two green candles, there was a heavier inflow of volume that also increased. So it is showing that, yes, there's buyers present, but there's also likely sellers continuing to distribute in this range. And you are forming a little bit of an upsloping wedge pattern. If you take this yellow trend line and this white upsloping trend lines at the highs of the charts have a more likely scenario of breaking down, although you can chop in a range for a considerable amount of time before you make that other move in terms of the general directional trend. In terms of the next sector we can look at is XLU utilities. So the utilities had a weekly range of 3.6% from the low to the high. In terms of the sector performance, it finished down minus 0.29% on the session. So also showing relative weakness. There's a couple key levels. The first minor level to watch is this little trend line over here, connecting your major pivot, connecting these two pivots over here. You can see you had a big bounce once you pierced this weekly 100, and you actually hit the upper end of this resistance and pulled off a little bit, but still finishing negative on the session. That the big levels, if we take out this pivot on a weekly basis, then it likely sends us to this $61 level. If you manage to get above this yellow trend line, then the next trend line to watch is this COVID low, connecting to your pivot over here in June. All of this chop, this failed confirmation of chop breakdown. So there's a couple key levels that XLU really have to get through, but in my mind, this sector is looking the most vulnerable to roll over, and potentially what we want to see to try to play this sector, and a couple of the names inside the sector like Next Era Energy and Duke Energy, we want to see a little bit of sideways consolidation forming a little bit of a bear flag or a bear wedge before we can potentially look to short. If this sector was to basically pop up to the $70 range or retrace to this yellow trend line, that would be your high probability of exercising and accumulating a short position on the utility sector. And in terms of individual names, you really want to isolate down some of the leading names in this sector and watch for potential bearish consolidation, because it likely means that if a leading stock like Next Era Energy or Duke puts in any form of bearish consolidation, then you could also watch for the same type of consolidation in this sector. Looking at XLRE, real estate right now has a market cap of 1.38 trillion, so very small compared to many of the other sectors. In terms of real estate, there's no sell signal yet. You did basically hit resistance over here. You can see it coincides with the weekly 100 moving average as well. Some of the stocks we're watching in this sector are going to be, let me just actually pull up the XLRE ETF. Some of the names are like Welltower, Realty, American Tower Corporation, Prologis. So those are some of the leading names in this particular sector that we have to keep an eye on. But notice how yields have perked up a bit. So this is going to be a very sensitive sector. If yields continue to rise and break out, it likely pushes this back down. If you're bullish on this sector, what you want to see is XLRE hold this down sloping trend line. If you lose this down sloping trend line, it likely means you head back to the lows for a retest of this support zone. Obviously, with XLRE, the weekly range was roughly about 3.26%, and it actually had a lot of relative weakness, closing down on the week minus 2.05%, which perhaps is starting to encompass the breakout in yields that we just had. XLB is the next sector that we will look at. If we pull up the XLB, the material sector, XLB is still trading at resistance. You got your weekly hammer reversals quite several weeks ago, followed by a third weekly hammer reversal. The two levels to watch, this upsloping red trend line and this hammer candle. You did put in another weekly reversal signal over here. You can see the importance of this is that you pierced through resistance and then sold right off back under resistance. So that is bearish price action. Even though this potentially looks like a little bit of a bull flag forming, this is no longer a bull flag because the more recent candle showed a reversal in price action on way heavier volume. So there's clearly distribution occurring in this particular sector. XLB basically closed down the week minus 1.65%, so also showing a lot more relative weakness compared to other sectors. Some of the sectors we have to watch for are like Lind, FCX, ADP. If commodities start to weaken with a surging dollar, materials could also be under a little bit of pressure in the short term. Finally, looking at XLE, XLE was the only bright spot in the S&P. All sectors were down last week except for energy. Energy had a weekly range of 6.9% from the low to a high, so a massive, massive, massive range. And energy did close the week up 4.94%, so a massive win for the energy bulls, considering the remaining sectors were all weak on the session. Now, in terms of energy, obviously Exxon and Chevron are the big ones. My opinion really hasn't changed on energy. We're still putting bearish consolidation inside of this initial sell-off. We have yet to confirm above this key level for multiple weeks now, even though we've had one attempt at breaking out, another second attempt at breaking out. So the more attempts that we have and the more attempts that we fail about getting out and confirming above these pivots, the more likely it is that it's going to break down. Now, you do have a major long-term upsloping wedge pattern as seen by these highs over here in 2008 and in 2014. Upsloping wedge patterns are notorious for breaking down, but clearly there's a tremendous amount of strength and momentum in the energy sector that we have to be aware of. But it's really interesting to observe that the energy sector is basically one of the smaller sectors, and it is seeing a great deal of money flow coming into the sector, but it's really not that market moving or importance because of how small it really impacts the S&P 500. So even with energy up tremendously, we still had a down week in the S&P 500. On that note, there's going to be lots to discuss on individual names, so I'm going to encourage you to explore our Trading Capital website to see how you can learn about the variety of individual stocks and tickers that we will be watching to really give us an emphasis and signal on where the directional trend is likely to head in the coming weeks. On that note, I'm going to wrap up this sector weekly analysis. Please stay tuned for many more videos that we will be posting. One chart I just want to pull up just to put into your perspective. It really depicts the strength of all of the sectors. So basically we have all of these sectors here in the S&P 500. I want to bring your attention to the 1-year track record, which is over here. And basically you can see energy is the only strong point, up 32.16% in the 1-year period. Every other sector is down. Over my career in studying history, it's very rare that you have all sectors down. Eventually that positive sector also starts to turn to the negative side. So if energy really starts to break down, that could be signaling the change in a cycle, which we usually see late in the session in terms of the nastier stages of a bear market. I still think we're in a bear market. There's obviously a lot of sentiment change out there that people are changing tunes. They're going with the soft landing narrative. I do not see it that way. I still think there's massive trend changes, massive damage done on individual sell signals across the market. So we're going to have to be aware that not the market, there's many aspects of the market that are diverging, and there's many individual names that are showing negative divergences and bearish sell signals. But as a whole, we have not got a definitive sell signal yet from the S&P 500, but we could be very close. On that note, I'm going to bid you farewell. Let's just do a quick check on the SPX on a weekly basis just to see what is transpiring here. So the SPX basically hitting some initial support, but you did see a massive surge on volume on this weekly candle. It is starting to get above average volume. The key level I'm watching is if we get above this white trend line, and then obviously if we get above this white trend line. Other than that, we're kind of putting in a little bit of this bearish wedge that could be breaking to the downside in the near term. That's kind of my overall expectations and thesis. Notice how we're retracing right to this weekly 100 moving average. It's slowly going to slope down in the coming weeks if you do not get above that level. So that's going to be really indicative to the long-term trend because it's such a powerful, powerful long-term moving average. On that note, take care, everybody, and we'll continue to post additional updates in our members exclusive circle.